now with Ajay Bodke, an advisory at Prabhudas Lilladher is with us. Ajay, good morning. Good to have you with us here.
Good morning, Prashant.
So, near term, right? And I'm just talking about the next 1 month or so, and there's a budget in between that. What is your view, Ajay? Are we likely to stay very ranged, or we can see a repeat of what the election threw up for the market?
I think I would think that in the short term, the market would move sideways. There is sort of a kind of blasé attitude that the market is displaying towards some of the concerns, and I would list out 4 of them, which I think the market needs to get over for a meaningful up move or rally to happen. The first pertains to the clear deficiency in monsoons that one has seen in the month of June. I believe the last numbers put out by the IMD show that there is a 37% deficiency for the country as a whole. And large parts of northern India, central India and western India have seen very large deficiencies. In fact, in areas like coastal Andhra, which is the rice bowl of India, there's a 71% deficiency. In Marathwada, 78% deficiency. In Gujarat, more than 80% deficiency. So with the exception of certain parts in the south like Kerala, southern Karnataka, and parts of east, northeast, as well as some parts of Bihar and Bengal, I think the country is sort of waiting expectantly for the monsoons to pick up in the month of July and August. No doubt the IMD has put out a statement that they expect that the June and July to have bumper rains, but some of the global agencies do not seem to be buying into that same intensity of enthusiasm that the IMD is saying. This is something we need to keep a very close watch on. Secondly, I think I'm looking at the sowing details, and the latest numbers put out over the weekend show that there is 48% deficiency in the total area under sowing in lakh hectares, from 251 lakh hectares last year to around 131 lakh hectares. And if you look at some of the main crops, rice, which is the main crop, there is a deficiency of roughly 44% in the area under sowing, from 39 lakh hectares to 22 lakh hectares. Oilseeds and pulses we need to keep a very close watch, because these are the two subgroups which typically tend to have higher inflation in case there is a deficiency in production. And in case of pulses, from 10.5 lakh hectares last year, we are down to 4.3 lakh hectares, which is a 59% drop. And in oilseeds, it's all the more worrisome. There's a 92% drop from 60.7 lakh hectares to only 4.8 lakh hectares. In coarse cereals also, there's a 33% drop from 29.3 lakh hectares to 19.5 lakh hectares. So overall, there's a 48% drop. Now, as and when the monsoon picks up, as per IMD in July and August, these deficiencies should progressively reduce. But these are 2 issues that we cannot be completely sanguine about. The third point is that we already have seen April-May fiscal deficit numbers touching 45.46% vis-a-vis 33.3% last year. So essentially it is again an indicator that the government will have to tighten its belt very strongly and ensure that fiscal consolidation in the medium term continues to be on course. We have to wait and see what number for fiscal deficit is trotted out by the finance minister. I don't think that 4.1%, which essentially employed techniques where a lot of revenues are brought forward for FY15 and for the 1 year forward revenues were brought forward, and a lot of expenses were pushed back. I think the FM this time should present a picture where the fiscal deficit, although it might look ugly, but at least there is some sort of a kitchen sinking that happens, and we get a clear picture about the state of finances that the previous government left the current government with. And lastly, I think the core sector numbers for May again continue to be disappointing. This 2.3% growth, again indicating that at the ground level, the policies are not yet, and it's too early for us also to expect that they are converting themselves into aggregate demand improvement. I've been talking to a lot of capital good companies, and in fact last week I met 3 or 4 of them, and they're basically saying that as and when focused policies for urban for transport, for energy, power, mining are spelled out in the budget, and the Honorable Prime Minister has said that he has 100-day programs for each of them he'll be announcing soon. I think the earliest that one can expect a revival in aggregate demand will only be in the second half of the current financial year, if not in the first half of next financial year. So the improvement in earnings for a lot of these companies in the sectors which have seen a massive bounce back, I think the market, it will test patience of the market. But what the market is looking for is a direction, a roadmap. For instance, in oil and gas sector, all of us know that I think it will be foolhardy to expect a very sharp jump in an environment in which I think Iraq is on the boil in case of diesel prices or kerosene or LPG prices. But even if, as per the Vijay Kelkar committee, a roadmap is spelled out that over next 2 or 3 years, a measured, a calibrated increase is expected to happen, right, the way in case of diesel it's happening, I think the market will be very enthused. Prashant.
Right. Just like to pick up two things, right? Monsoon, the expectation for agri growth in fiscal 15 is about 5%, right? If you see, it's actually about 2.5%, beg your pardon. 2.5, not 5%, 2.5% agri growth. If agri growth hurts a little bit, and I think your fiscal 15 GDP expectation is what? 5.3, 5.2, 5.3% or so. The impact on actual GDP growth is very little. Now, in food inflation, will we see a repeat of 2009? When in fiscal 10, fiscal 11, food inflation and WPI jumped to 15% plus. The government is at least making all kinds of right noises to say we won't let that repeat itself. So I'm not sort of dissing the importance of a good rainfall, but I'm just saying for the market, would it matter that much? And second point is this fiscal deficit number. So you said, well, a kitchen sinking exercise is good. So what are you saying? You're saying, well, the government should say, the interim budget 4.1% number is not true. The actual number is about 4.5, 4.6, 4.7%. And you're saying people will be okay with that. So just these 2 points, quickly.
I think the second point I'll take first. Transparency always pays. And I think the new government is committed, I think, to present a fair and true picture in terms of whatever subsidies were deferred in the last, pertaining to last financial year. I think a true picture should be shown. Because this is the time that the government sort of should start with a clean slate. And in case of all subsidies, be it fertilizer subsidies or fuel subsidies or food subsidies, I think even if the number, as you put it, were to look slightly uglier than 4.1%, it could be even 4.5 to 4.7%. But I think the rating agencies and the institutional investment community, I think, are perfectly okay with it, because they do know that the numbers are uglier than what sort of were trotted out, and hence I think they can make a base for going forward over the next 3 years, what kind of sort of reduction in fiscal deficit they intend to achieve and how they intend to achieve. The quality of fiscal consolidation is what market will look at, not just quantity of fiscal consolidation. Unfortunately, over the last 2 years, one has achieved the fiscal deficit numbers by reducing plan expenditure by 80,000 crores last year and 1 lakh crores a year before that. This is something which is adding to the supply side bottlenecks and making inflation more structural in nature. So this government, which is anyway committed to reviving the moribund investment cycle, will need to correct that, will need to tackle revenue deficit and not cut down on plan expenditure. In fact, they need to increase plan expenditure and cut down on revenue deficit and ensure that the quality of fiscal consolidation is what they pay heed to. The first point that you made quickly, I'll make a point. Although agriculture contributes minuscule to the total GDP as compared to services and industries, but the number of people dependent on agriculture is still 60 to 65%. Agri and allied industries to agri. So hence I think one cannot belittle the impact that it could have on the spending power in terms of in the rural areas if there is a severe drought or deficiency in monsoons. And also, let's not forget, the impact also is felt in the next following crop in Rabi. As reservoir levels fall, there's also an impact that could happen on the Rabi crop.
Okay, got that. I think we've sort of broadly and comprehensively outlined your view from a macro and top-down perspective. Just like your thoughts on any opportunities that you see in the market, anything that you come up with newly, anything that you've met, any management you've spoken to?
Yeah. See, I think I'm very hopeful that the government will spell out policies, forward-looking policies for the power sector in the budget, because this is one sector that can have a multiplier effect in case of a large number of process industries, if you get the power situation right. And in that context, I think some of the policies expected about reduction of the coal sold by Coal India in e-auction clearly will be beneficial to a company like NTPC. Also, I think the disputes between Coal India and NTPC, we are expecting some sort of a positive resolution, and the government's intention is very clear that they want to get, I think, the power output to go up sharply. And from that perspective, again, NTPC being the largest company, extremely cash-rich company, I think will play a very important role. The company has 15,000 crores of cash in its books, and our expectation is that it is in the market to acquire some of the plants, be it in the SEB sectors or in the private sector, whose balance sheets are out of whack, and the plants are operating at low PLFs. NTPC has proven ability of ensuring that the efficiencies come into play and the PLFs go up. And I think over the next 6 to 9 months, we are expecting a large number of acquisitions to happen, and NTPC is in a position, I think, to go ahead and consolidate, be at the forefront of consolidation in this sector. So I think NTPC is a stock that I would be looking at. We are also very positive on Motherson Sumi. Not only it's a play on an improvement in the cyclical sector in India, but they've got a 4 billion euro worth of order in Europe. The implementation will start very soon. We are expecting an extremely strong earnings growth of 29% in the current financial year, followed by 37% in FY16 for Motherson Sumi. The stock is trading at, stock has a very strong ROE of 37% this year, expected to remain steady next financial year, and the stock is trading at only 16.2 times. We are advocating that investors should have this as part of the core portfolio. In addition to that, I think Britannia Industries also continues to look very good. In case of large cap FMCG, on dips, one can also look at ITC. There has been concern about what the budget would spell out in terms of the tax increases, and that's why the stock has come off quite sharply. But I think it offers, from medium term perspective, a good entry point. In capital goods, as I said, Thermax and Crompton Greaves in the medium term continue to look very good. PI Industries and UPL in agri sector will continue to fare, in our opinion, very well. And in case of banking, I think we would be positive on HDFC Bank. The bank has underperformed the banking index because of concerns on the FIPB approval not coming through. But once that issue gets sorted out, I think that underperformance, in our opinion, should be bridged. We are also positive on Axis Bank. And in case of PSU banks, I think our stance on SBI is positive from the current levels.
NTPC, Motherson Sumi, Britannia, ITC, Axis Bank, State Bank of India. These are specific ideas coming in from Ajay Bodke. Ajay, I just want your thoughts on Eicher Motors. Right? I mean, it's really, a huge move last few years. It trades, I think, at about 25 times fiscal 15 earnings. What's your view here?
Unfortunately, our auto analyst does not track the stock, so it would not be right on my part to proffer an opinion on a stock which is not tracked by us.
Okay. No, fair enough. We'll leave it at that, Ajay. Thanks very much for joining us.
Thank you so much.
It's a pleasure chatting with you.
Pleasure.
And thanks very much. Ajay Bodke.